the nines, for the leaders of today and the visionaries of tomorrow.
This is India's #1 news network, and you're watching News 9, English news as it should be.
Very good morning. You are watching News 9. I'm Karthik Malhotra. Well, Donald Trump may be pushing for manufacturing in the US, but there is one thing which is being made in the USA, and that's called tariffs. That's right. On the show today, we will tell you that US has now slapped 245% tariff on China. But that's not all. Also on the show, the Gensol BluSmart unmoldsing juggy mess. We will decode that for you right here on Morning Brief at 9. This is Morning Brief at 9. First up, let's look at the headlines making news this Thursday morning. Made in the United States of America, the most authentic trade war of the century as US slaps 245% tariff on China. Donald Trump may like tariffs, but markets certainly don't. US markets tank yet again. Tech stocks take a beat, sliding 3%. NVIDIA sees deep cuts on chip war in the making. But India looks more immune than others, set to become a $10 trillion economy by 2047, says Chief Economic Advisor V. Anant Nageswaran at India Conclave 2025, organized by London Business School in Mumbai. And it's not just the chief economic advisor, even the United Nations says India will remain the fastest growing major economy. India to grow 6.5% in 2025. But all is not well with gold, especially if you're intending to buy it. Gold soars 1,650 rupees per 10 grams, reaching a fresh peak of over 98,000 rupees. Central banks begin hoarding the yellow metal as tariffs upend the known world trade order. Commerce Minister PIYUSH GOYAL meets STARLINK delegation in India, discusses future plans for their India investments. And it looked like India is flying high as air passenger traffic in India all set to surpass China's by 2026. And if you're trying to book a cab using the BluSmart app, well, you're not alone in not being able to find a ride, as all three metros, Delhi, Mumbai and Bangalore, face cab outage. Well, it's not a glitch in the app, but seems like a glitch in corporate governance. And BluSmart's sister concern Gensol, which is undergoing SEBI scrutiny, well, its founders Anmol Singh Jaggi, Puneet Singh Jaggi say that they will fully cooperate with the forensic audit set out by the market regulator. In a sharp escalation yet again of trade tensions, China is now facing a whopping tariff on its exports to the US, which is now at 245%. This, according to a White House statement. The hike follows China's retaliatory actions, including export restrictions on 7 rare earth elements critical to US defense and technology sector. The announcement came as US President Donald Trump signed an executive order launching a fresh investigation into national security risks of relying on imported critical minerals. Remember, China's export controls imposed on April 4th were a direct response to Trump's earlier tariff hike on Chinese goods. Syringes and needles from China were hit especially hard, facing a staggering 245% combined tariff. That included levies under categories like pre-2025 tariffs, fentanyl and reciprocal penalties. Now, even lithium-ion batteries that go into electric vehicles were next in line, facing tariffs up to 175%, along with squid, wool sweaters, and a growing list of consumer and industrial goods. Meanwhile, China's President Xi Jinping has called on Asian nations to stand united against geopolitical confrontation, unilateralism, and what he calls protectionism. Listen in.
当前国际秩序和经济全球化遭受冲击。
In the face of shocks to global order and economic globalization, China and Malaysia will stand with countries in the region to combat the undercurrents of geopolitical and camp-based confrontation.
阵营对抗暗流，突破单边主义，
Overcome the countercurrents of unilateralism and protectionism, and safeguard the promising prospects for development in our shared Asian home.
At a time when
Well, staying with the trade war, U.S. stocks did not like the 245% tariff on China, as the stock markets closed sharply lower yesterday, following a warning from NVIDIA about major changes from new U.S. curbs on its chip exports to China. Now, adding to the market's concerns, Fed Reserve Chair Jerome Powell stated that U.S. economic growth seems to be slowing down. The tech sector was hit the hardest, with chip makers dropping due to the ongoing trade with China.
U.S. stocks ended sharply lower on Wednesday, with the Dow dropping 1.7%, the S&P 500 losing 2.25%, and the Nasdaq nosediving 3%. Speaking at the Economic Club of Chicago, Federal Reserve Chair Jerome Powell said larger than expected tariffs from President Trump likely mean higher inflation growth. Powell added that the central bank is waiting for greater clarity before considering policy changes. Stocks added to early declines after Powell's comments. Michael Landsberg is Chief Investment Officer at Landsberg Bennett Private Wealth Management.
I think the market hoped that he would be clairvoyant and tell us where everything's going to go. I think there was talk there that the tariffs were going to affect earnings later on, and he didn't necessarily say how much it was going to be, but obviously the idea that it was larger than expected in terms of the tariffs, I think scared some of the market participants to say, hey, maybe earnings may decelerate more than we're expecting.
Among individual stocks, chip makers plummeted due to U.S. trade restrictions with China. NVIDIA shed nearly 7% after the AI chip leader said it would take a $5.5 billion charge due to the U.S. government's limit on exports to China, a key market for one of its most popular chips. Rival Advanced Micro Devices, which flagged charges of up to $800 million, fell more than 7%. And shares of Dutch chip-making tools giant ASML also dropped 7% after it warned that Trump's tariffs had led to more uncertainty about its outlook.
And well, you heard it, but let's get a little deeper into it. NVIDIA has announced that it will take a $5.5 billion charge after the U.S. government restricted exports of its H20 artificial intelligence chip to China, a key market for one of its most popular products. The chipmaker stated that the decision is a direct result of U.S. move to curb its shipments to China. Take a look.
NVIDIA is taking $5.5 billion in charges over US trade restrictions. The chip maker said Tuesday that the move is a result of Washington curbing its shipments to China. The same day, the State Department said it was further limiting the sale of the company's H20 chips. That was the most advanced model still permitted for export to China after earlier sanctions. The new move also affects products from rival firms like AMD. NVIDIA said US officials were concerned the chips could be used to build supercomputers. Washington has tried to restrict sales for such uses since 2022. On Tuesday, the Institute for Progress, a non-partisan US think tank, said some Chinese firms were probably already breaching those controls. It identified gaming giant Tencent as likely to have used H20 chips in a supercomputer. It said the computers that trained the DeepSeek AI model probably also broke the rules. NVIDIA shares plunged around 6% in after-hours trade following the latest news, with AMD down even more. Donald Trump's sweeping global tariffs are also set to be a headwind for US chip equipment firms. Reuters sources say industry calculations put the total cost to the sector at more than $1 billion per year. Among the most exposed companies are said to be chip gear makers like Applied Materials, which didn't respond to a request for comment on the calculations. Costs to the sector include lost sales and the expense of finding and using alternative suppliers for complex components.
All right, and staying with the trade wars and the tariff wars which are ensuing, now let's listen into what U.S. Federal Reserve Chair Jerome Powell said on trade policies introduced by the Trump administration.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Where we are now, again to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. One is just the size of the effects, and as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation.
All right, Fed Chair Jerome Powell there in conversation with former RBI Governor Raghuram Rajan. But coming back to India now, with a long-term focus on sustainable development through continuous research and development efforts, policy consistency, as well as deregulation, is eyeing to become a $10 trillion economy and a developed nation by 2047. This according to Chief Economic Advisor to the Government of India, V. Anant Nageswaran, who was speaking at an event yesterday. Well, Nageswaran spoke at the India Conclave 2025 organized by the India Club in association with London Business School. Listen into what he had to say about India going stronger on manufacturing.
Because the tariff situation is likely an opening gambit, and because it is subject to change, and because it is a first step in the negotiation process, India should not base its policies based on the tariff advantage, but need to continue to work on the fact that we were disadvantaged, which is what was reflected in the trade deficit numbers. And we are taking on a country that has made manufacturing a strategic national goal enunciated by President Xi Jinping in the 19th Central Committee meeting of the Communist Party of China in 2021. Therefore, we need to redouble our efforts, both on the public sector side and on the private sector side, in terms of R&D investments and having longer horizons rather than focusing on short-term goals, etc. So that is what I spent my initial remarks on. So we need to focus on a very differentiated strategy between developed states and developing states within the country, prioritize adaptation over emission, ensure that affordable and reliable energy supply is available. And these are the strategies, and continuing to double down on deregulation, which is what will take us to developed country status by 2047.
Now, staying with India's growth projections, a UN report also says that India is expected to grow by 6.5% this year, 2025. And this comes on the back of continued robust public spending and ongoing monetary easing, even as the world economy is witnessing a recessionary trajectory driven by escalating trade tensions and persistent uncertainty. The UN Trade and Development, in its new report, Trade and Development Foresights 2025, Under Pressure, Uncertainty Reshapes Global Economic Prospects, said the global growth is projected to slow to 2.3% this year, placing the world economy on a recessionary path. Now, India is projected to grow by 6.5% in 2025, slightly lower than the 6.9% growth of 2024, but still maintaining the status as the fastest growing major economy of the world. Now, the report projects that the South Asian region as a whole will expand by as much as 5.6% in 2025 as declining inflation opens the way for monetary loosening across most of the Asian region. But food price volatility will remain a risk and complex debt dynamics will continue to burden economies such as Bangladesh, Pakistan as well as Sri Lanka. The report said that the world economy is on a recessionary trajectory driven by escalating trade tensions and persistent uncertainty. The slowdown will affect all nations, but many low-income countries face what it calls a perfect storm of worsening external financial conditions, unsustainable debt and weakening domestic growth. And on to our next story this morning. Gold prices have soared yet again, and this time by as much as 1,650 rupees to hit an all-time high of 98,100 rupees per 10 grams in the national capital region yesterday. And this amid a global rush for safe haven asset investments triggered by the escalated trade war between the US and China. Now, gold of 99.5% purity appreciated by 1,650 rupees to hit a fresh peak of 97,650 rupees per 10 grams against the previous close of 96,000 rupees per 10 grams. Now, gold prices logged the highest single-day gain since April 11th when spot rates skyrocketed by 6,250 rupees per 10 grams, the record steepest single-day rise so far in the local markets. So far this year, the yellow metal prices have risen by 18,710 rupees or 23.56% just this year alone. On the global front too, spot prices of gold rose to touch a record high of $3,318 per ounce. Later, it pared some gains to trade at about a little under $3,300 per ounce. Remember, US President Donald Trump has announced an investigation into whether tariffs are needed on critical, further fueling market anxiety. Yesterday, the US administration further raised tariffs on most goods from China to 245%. Commerce and Industry Minister PIYUSH GOYAL met with a delegation from STARLINK, the satellite internet service company owned by Elon Musk. Their technology platform, partnerships and future investment plans in India. The delegation, which included Vice President Shad Gibbs and Senior Director Ryan Goodnight, also highlighted their collaboration with telecom giants in India, Airtel and Jio, to deliver high-speed satellite internet to Indian customers. Now, taking to social media about the meeting, GOYAL noted the potential of Starlink's technology to address connectivity issues in India, remote areas where traditional telecom services are often costly or unavailable. Remember, billionaire Mukesh Ambani's Reliance Jio in March announced a pact with Elon Musk's SpaceX to bring Starlink satellite internet services to India. Telecom tycoon Sunil Bharti Mittal's Bharti Airtel has also signed a similar partnership deal with SpaceX. Well, time for a short break right now, but when we come back, we'll not just get you the mood of the markets, but also the perfect mess being formed by Gensol, BluSmart and promoter Anmol Singh Jaggi. We will try and decode what the Gensol mess means for you, the investor, and for those who are looking at hailing electric vehicle cabs as their daily commute rides. Stay with us. You're watching Morning Brief at 9.
Expert living. I need my career.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
You're watching Morning Brief at 9. The markets have just opened a few minutes ago. Let's get you the mood on the street this morning. Not looking too pleasant. Sensex and Nifty are both down in early trade. Of course, taking cue from the turmoil we saw on Wall Street yesterday, especially on the IT-heavy Nasdaq index. Well, Sensex and Nifty both down about 0.2 of a percentage points. Nifty 50 in early trade down about 0.25 percentage or so. Better news coming for small caps and mid cap. The Nifty small cap 100 is up about 0.5 percentage point. Not too much fear in the market, it seems, as India Wix is holding strong at about 15.6 levels this morning. Let's look at the mood on sectors and stocks, specifically on the Nifty 50 heat map. And the major blow this morning coming from the IT space. Look at Wipro. Wipro is down almost 6% in trade this morning. HCL is down about 2.5%. Infosys, TCS all down. Tech Mahindra all down more than or ranging around 1.5% or so. Remember, this comes as Nasdaq took a massive beating yesterday, especially on the ongoing tariff war between US and China, which is directly impacting the chip makers, NVIDIA and alike. So this is the mood on the street this morning. Not a pleasant start, but a highly expected one at that. Of course, we will bring you all the latest on markets as the day goes along and as days and weeks come along. But shifting focus now, several passengers Delhi NCR, Bengaluru and Mumbai are unable to book cabs through ride-hailing app BluSmart from yesterday. Now, BluSmart, co-founded by Anmol Singh Jaggi, who is also the promoter of Gensol Engineering, provides electric car services in Delhi NCR, Bengaluru and Mumbai. Well, the fact that you're not able to book cabs today and yesterday is not in the app, but seemingly a glitch in the promoters of the company. Gensol and Jaggi are facing multiple headwinds, including financial woes, and have come under market regulator SEBI's scanner. The company, as on Jan 9th, had a fleet of over 8,500 electric vehicles and a charging network of 5,800 stations across 50 hubs in the 3 metro cities. They were also supported by 10,000 plus active driver partners. But reports now suggest that this fleet and its drivers will likely serve competitor Uber under the Uber Green format. Now, BluSmart was leasing electric cars from the founder's other company, Gensol, which is now on SEBI's radar for fraud, diversion of funds and corporate governance issues. The BluSmart cabs may have been clean. Gensol may have been promoting clean energy, but its founders reek of greed. There has been nothing clean about their operations from what has come to surface so far, at least. Well, Gensol Engineering has said that the company will fully cooperate with the forensic audit to be conducted at the behest of market regulator SEBI. As directed in an interim order, SEBI will appoint a forensic auditor to thoroughly examine the books of accounts of the company and its related entities, Gensol Engineering said in an exchange filing. The company further said that complying with SEBI's directions in an interim order, Anmol Singh Jaggi and Puneet Singh Jaggi, promoters of the company, have restrained from holding the position of a director or key managerial position in Gensol until further orders. They are no longer participating in the management of the company as per SEBI's instructions effective immediately. Now, Gensol Engineering's promoters treated the listed company as a proprietary firm, diverting corporate funds to buy high-end apartments in the Camellias. Look at the numbers on your screen. 43 crore rupees paid from the company's accounts to buy a house, a high-end luxury house at DLF Camellias in Gurgaon for a whopping 43 crore rupees. Now, that's not all. There's also been a splurge in purchasing multiple other luxury items, but look at the other numbers coming in. 6.2 crore rupees transferred from the company's fund to Anmol and Puneet Singh Jaggi's mother's account. Well, it's not just the mother, there has also been transfer to the wife's account, as much as almost 3 crore rupees from the company's funds diverted to Anmol Singh Jaggi's wife's account. Let's look at the other numbers. Let's look at the investment which has been made in Ashneer Grover, another often tainted and so to speak not the most clean of startups that one has read stories about. Ashneer Grover's company has received 50 lakh rupees from Gensol. For what exactly, we really don't know at the moment. Well, this is not all. There have been other purchases. A luxury golf set purchased for as much as 26 lakh rupees. These are the kind of expenses which have been made by Gensol, and these definitely seem like personal expenses being met and the money being used as a promoter's piggy bank. Well, the founders apparently have also gone on a holiday where 3 lakh rupees have been transferred for a trip booked on Make My Trip using Gensol's money. Well, the capital market regulator SEBI on Tuesday barred Gensol Engineering and promoters Anmol Singh Jaggi and Puneet Singh Jaggi from the securities market until further orders in the fund diversion and compliance, corporate governance compliance issues. Well, further, markets watchdog directed Gensol to put on hold the stock split which it had announced earlier. Joining me on the show this morning is Mr. Sriram Subramaniam, founder and managing director of InGovern Research. Mr. Subramaniam, good morning. Thank you so much for joining us on this very important developing story. I want to understand basically from you what happens next. This forensic audit will be instituted, and the writing pretty much seems to be on the wall that there has been diversion of funds used for personal gains and not really for the company. So what happens from now from the forensic audit that begins?
Yeah, good morning. I think forensic audit is just like a bandage put on a huge wound, so to say. At the end of the day, the company needs to have a change in management. I think either the board of directors, the independent directors need to step up and form a committee to run the company on a day-to-day basis. Because right now, I think total loss of trust. Employees will want to leave or already be searching for jobs. Two is, I would think that even vendor partners would be trying to recover all their monies, whatever is due. And three is, even IRDA and PFC would send notices to recall their debt. Already at the other end, I would think that the people who have given loan against shares, and that's the reason the stock price will continue to tank. Till it goes down and becomes a penny stock, I would think.
Right, it could possibly become a penny stock is the word coming from Mr. Subramaniam. Mr. Subramaniam, does it also make sense at this point to delist the company and return shareholders' money? Is that something that can be provisioned by the market regulator?
No, I don't think that is possible. There is no money out there anywhere, I would think. If anything, the lenders have a huge obligation. The company has a huge obligation to the lenders. So I would think shareholders will come much beyond and the lenders will take precedent because they will be secured lending and the like. So recovery, if anything, the lenders will put their foot down.
All right, so lenders are going to be served first, investors will come next. But what really happens now to Anmol Singh Jaggi and Puneet Singh Jaggi, the founders of the companies, the promoters of the companies, who are now obviously dealing with this scathing investigation that SEBI has ordered? And there seems to be no doubt that there was greed at play. This was not just a simple case of corporate misgovernance, but this was pure greed, which resulted in the kind of transfers that the company has made to personal accounts.
Yes, I mean, obviously, it is when the going is good, people want to make money, and this company and the promoters fanned social media, pledge shares, and offloaded shares by talking up their shares at very high prices. So it's total greed. It is, as the SEBI's order said, it is something to do with thinking of it as their own piggy bank, so to say. So there is no credence to what investors, serving investors or serving lenders, even whatever money they raise from lenders were thought of as their own piggy bank, I would think. So at the end of the day, trust is lost now, and so to recover from here is almost impossible, I would think.
Right, no recovery seems to be in sight. But Mr. Subramaniam, please help me understand. I mean, these are founders who've launched unicorns, who have listed their companies on markets, and apparently enough due diligence would have been done through the way of filing of the red herring prospectus. There would have been enough scrutiny on the company. Why would promoters make decisions like these? I mean, do they think they are above the law? And it's not the first time we've seen a case like this. Both listed and unlisted companies in the past have seen this level of corporate misgovernance, where they take the system for granted. They take their company to be as if it is their own piggy bank, which is what the SEBI order has said. Do they really think they can get away with frauds of this nature?
Yeah, I would think so, because at the end of the day, there is a sense of hubris. There is a sense of that we can't go wrong, we cannot be caught, kind of a feeling. I'm sure Gensol, especially in bullish markets, especially when in the new age of social media, where influencers and retail distribution, pumping and dumping of shares seems to be all the more easier. So what is happening is Gensol is not the last case, and there are many more Gensols out there which will be unearthed over months and years, because the investors' greed also plays out, the promoters' greed also plays out.
Right. Of course, I mean, there is greed at play, no doubt, but can there also be, let's say now, a criminal investigation launched against the promoters of the company? Does this qualify as a case to undergo criminal investigation and not just forensic audit on accounts of the books of the company?
I would think so. If anything, IRDA and PFC should file a criminal case, because at the end of the day, their letters have been forged, their signatures have been forged. They never issued those letters unless there was some connivance of some IRDA or PFC officials. But from the looks of it, it looks like those letters were forged, and many documents were forged. So there is a need for criminal investigations and I would say prosecution.
Okay, but Mr. Subramaniam, why did it have to be a letter, a complaint written to market regulator last year which led to this investigation? By virtue of being a listed company, Gensol mandatorily would have had to undergo audits every year. Why did the auditor not flag lapses like this? Why did the CFO of the company not flag these, these lapses? And what were the accounts teams of the companies doing when they were receiving orders to go ahead and make these transfers? I mean, on the face of it, these obviously don't look like business operations. These look like personal piggy bank related transactions being done by the company's accounts. So what is the role of the auditor? What is the role of the CFO in a company if something as serious is not getting countered, not getting flagged, and not getting restricted?
Yeah, unfortunately, CFOs, especially who don't have their own voice, will adhere to whatever the promoters are saying. It is, as you rightly said, even auditors are doing it. If it's an unknown auditor who is dependent on the fees of Gensol for a day-to-day living, obviously would have signed off on the accounts without questioning any transactions, because I'm also blaming the independent directors. The independent directors should have stepped up as to what is the logic of these transactions, what is the logic of even these related parties. There were so many related party companies which are disclosed in the annual report, but yet people, the independent directors did not question the management on what is the reason why there is no logical explanation for having so many related party companies. And that's the reason I think it is not that it cannot be hidden. If the promoter wants to do it in a very, I would say, secretive manner, it can be hidden from independent directors. But I think here at least it was disclosed in annual reports and the like, and there was a case for abusive related party transactions, and that's what played out.
All right. Mr. Subramaniam, also help recap for our viewers what was the issue really with BluSmart, because to our understanding and what we read so far is that Gensol had actually purchased these electric cars on its own books. It became a balance sheet item for Gensol, and then Gensol leased these cabs to BluSmart and it became a P&L sort of income generating activity for Gensol. BluSmart, being a sister concern, got these cabs on lease at a cheaper price than what the market would have offered them, and hence BluSmart's own valuation ticked up. So in a sense, this connivance has fooled BluSmart's investors in showing a healthier book, but it has also cheated Gensol's investments by not letting Gensol take as much revenue as it potentially could have had it given these cars to BluSmart at market price.
Agreed. Definitely, see, as you said, the transfer pricing between BluSmart and Gensol is not at market rates. Two is now that the trust is lost, even the driver partners, as you said, may not be wanting to serve the company at all, because at the end of the day, their I would say salaries and everything may be due already, and or they fear that it may not come. So vendor partners, drivers, even cash flow for that matter, working capital issues, etc. The banks will pull back all the ODs and everything which they have, and so all these the stakeholders, they've lost the trust of all stakeholders. So even banks which lend on a day-to-day basis on the overdraft, that itself would be closed down.
Right. And what about the arm's length distance which should be maintained between a listed entity and its other sister concerns or companies promoted by its promoters? These are cases that we've seen in the past. This is, I think, one of the most recent cases that comes to mind is what happened with 197 Communication and Paytm Payments Bank. Were there also disclosure issues? Did Gensol not inform the market regulator that there is a sister concern with the same promoters sitting on top of it and there is a cross-transaction between the two companies?
To some extent, they have informed that, because in the annual reports for the last couple of years is well known, and it's well reported that there is a relationship between Gensol and BluSmart and even Matrix Gas, etc., etc. But all this tunneling of funds and layering of funds, and which the SEBI's order clearly puts out. And in fact, I would suspect that SEBI's order doesn't even cover all the transactions. I mean, there could be many more transactions, there could be many more skeletons in the cupboard. So while there is disclosure, that necessarily doesn't prevent fraud.
All right. And one final question to you, Mr. Subramaniam. How long before the report by the forensic auditor is filed? How long before we can get some sort of a closure on this case?
No, I don't think there's any closure for that matter. A forensic audit is not just the end, it is just one step. So I would think at least a couple of months, if the forensic auditor is provided access to accounts in the first place, access to all the data quickly, they can complete it within a couple of months.
All right, a couple of months for the next level of investigations perhaps to take off after the forensic audit is through. Mr. Subramaniam, thank you so much for taking time out and being here with us on News9. Moving on now, India is set to surpass China in air passenger traffic growth with a projected 10.5% growth rate in 2026. This according to the Airports Council International, or ACI. While India's growth rate is expected to be 10.1% this year, trailing China's 12%, the country's aviation market is catching up fast. ACI's Director General for Asia Pacific noted that India is focusing on expanding improving its aviation infrastructure. Moreover, India is projected to continue this rapid growth with a compounded annual growth rate of 9.5% from 2023 to 2027, surpassing China's 8.8%. The long-term forecast is even more notable as India's aviation market is expected to be the fastest growing globally with a CAGR of 5.5% from 2023 to 20 compared to China's 3.8%. As part of this growth, ACI estimates that by 2043, India's yearly trips per capita will rise to 0.4, up from 0.1 in 2023, marking a massive increase in air travel demand. And before we slip into a short break, let's look at all the global stories making news this Thursday morning. China faces up to 245% tariffs as US launches national security investigation into critical mineral imports amid escalating trade tensions. China's economy beats first quarter growth forecast, but US tariffs and weak demand raise concerns over recovery momentum. US stocks tumble as Fed Reserve Chair Jerome Powell warns of slower growth and larger than expected tariffs, with chip makers hit hard by new trade restrictions. NVIDIA takes $5.5 billion hit as US curbs chip exports to China, with supercomputer concerns and global tariffs adding pressure to the sector. US retail sales soar in March as consumers rush to buy cars and goods ahead of looming tariffs, but fears of slowing growth threaten future momentum. And global pharmaceutical companies including Pfizer and AstraZeneca demand EU support to mitigate costs and simplify regulations ahead of looming US tariffs. The World Trade Organization has slashed global trade forecast, warns US tariffs and China tensions could trigger steepest slump since COVID-19 pandemic. And White House revokes permanent press pool access for Reuters, Bloomberg and Associated Press, escalating tensions over Trump administration's control of media coverage and real-time reporting. And finally, British inflation slows to 2.6% in March, but rising costs and global uncertainty still threaten economic stability, warns the Bank of England. All these stories and more, you're watching Morning Brief at 9.
Beyond better, the new Tiguan R line. Volkswagen.
Bharat welcomes the world to a new era of creativity. Waves, World Audio-Visual and Entertainment Summit. Connecting creators through Creatosphere. Wave Accelerator. Waves Bazaar,
where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
Ball, please.
I am my dear cool.
ये एयर कंडीशनर नहीं, AI कंडीशनर है।
Welcome back. You are watching Morning Brief at 9. Let's continue with the global stories we are tracking for you this Thursday morning. China's economy is off to a strong start this year, beating expectations with its first quarter growth due to solid consumer spending and steady industrial output. But even with this momentum, policymakers are now bracing for potential fallout from new US tariffs. More details in this report.
China's first quarter economic growth beat expectations, even as policymakers brace for the impact of US tariffs that analysts say pose the biggest risk to the Asian powerhouse in decades. Data on Wednesday showed GDP grew 5.4% from January to March from a year earlier, beating analyst expectations in a Reuters poll for a rise of 5.1%. Retail sales, a key gauge of consumption, as well as bank lending, topped analyst forecasts. Industrial output has also picked up speed as rushed shipments to beat the latest tariffs from U.S. President Donald Trump.
We have $1 trillion trade deficit with China. Hundreds of billions of dollars a year we lose with China, and unless we solve that problem, I'm not going to make a deal.
However, analysts expect that trend to reverse sharply in the months ahead as the hefty U.S. levies take effect. Moreover, higher unemployment and persistent deflationary pressure concerns over weak demand and point to an uneven economic recovery following the COVID-19 pandemic. The Reuters poll showed that for 2025, the Chinese economy is expected to grow at a subdued 4.5% pace year on year. That's half a point down from last year, and short of the official target of around 5%. Policymakers have repeatedly said the country has ample room and tools to bolster the economy. Premier Li Qiang this month pledged to roll out more support measures. Beijing has put boosting consumption as the top priority this year as it tries to cushion the impact of the Trump tariffs. The ruling Communist Party is expected to hold a meeting later this month to set its policy agenda for the coming months.
And ahead of the kickoff of tariffs, U.S. retail sales saw their biggest increase in over 2 years in the month of March as households rushed to make purchases of motor vehicles and other goods in anticipation of higher prices on account of tariffs. Auto sales were the main contributor, with dealerships reporting their largest jump in receipts since Jan 2023. Take a look.
U.S. retail sales rose by the most in more than 2 years in March, as households stepped up purchases to avoid higher prices from President Trump's tariffs. The Commerce Department on Wednesday said retail sales increased 1.4% last month, up significantly from February's 0.2% rise. Auto sales drove most of the buying, with dealerships reporting the biggest jump in receipts since January 2023. Trump's 25% global car and truck tariffs came into effect in early April, with industry analysts and manufacturers warning that the duties would significantly raise motor vehicle prices. A slew of other tariffs have been imposed on most goods, resulting in a stampede by consumers to stock up. But the robust sales pace is likely to fizzle in the months ahead, amid fears of slowing growth and consumer sentiment near 3-year lows. One economist told Reuters, quote, "It's hard to feel good about Americans panic buying cars as consumer confidence craters," adding that the economic outlook is in flux with, quote, "large changes to trade policy nearly every day."
Nearly 3 dozen global pharmaceutical companies have written to the head of the European Commission urging support to continue operations in the EU despite the threat of US tariffs on imports. The companies are requesting measures to help mitigate the cost of pharmaceutical innovations. Take a look.
Nearly 3 dozen global pharmaceutical companies have demanded help to maintain operations in the EU. That's ahead of expected US tariffs on imports, according to a French business outlet on Tuesday. It said that companies including Pfizer, Eli Lilly and AstraZeneca sent a letter to European Commission President Ursula von der Leyen, in it saying they face cost disadvantages in Europe versus the US. As in the US, drugs are sold at prices on average twice that of some European countries. Among their demands were measures to compensate them for the cost of pharmaceutical innovations, the report said. The companies also asked the EU to simplify regulations. They noted that companies must currently conduct multi-country clinical trials for drugs. Last week, European Pharmaceuticals warned von der Leyen that US tariffs would hasten the industry's shift toward the United States and away from Europe. The US is the biggest market by sales for big pharma companies. Europe and the United States have interconnected supply chains for medicines, and according to Eurostat, EU medical and pharmaceutical exports to the US totaled over $101 billion in 2023.
Well, the World Trade Organization has issued a stark warning, slashing its forecast for global merchandise trade from positive growth to a decline. In a statement, the WTO said further US tariffs and their ripple effects could trigger the steepest downturn in trade since the peak of the COVID-19 pandemic. Here's more.
The World Trade Organization slashed its forecast for global merchandise trade from solid growth to a decline on Wednesday. It said US tariffs and spillover effects could lead to the heaviest slump since the height of the COVID pandemic. WTO's Director General, Ngozi Okonjo-Iweala.
We project that global merchandise trade volumes will decline by 0.2% in 2025, nearly 3 percentage points below the level we would have expected without recent trade policy shifts.
The WTO said its new estimate was based on measures in place at the start of this week. President Donald Trump imposed extra duties on steel and car imports, as well as more sweeping global tariffs. That was before unexpectedly pausing higher duties on a dozen economies. His trade war with China has also intensified, with tit-for-tat exchanges pushing levies on each other's imports beyond 100%.
We currently estimate that merchandise trade between the economies will fall by 81%, a drop that would have reached 91% without recent exemptions for products such as smartphones. So without the smartphones, 91%, with that exemption, 81%. And this level of a drop in US-China trade of the magnitudes we are talking about is virtually tantamount to a decoupling of the two economies.
The WTO chief added that this trade disruption could increase Chinese merchandise exports across all regions outside North America by between 4% and 9%. And other countries would have opportunities to fill the gap in the US in sectors like textiles and clothing. The WTO said the services trade, though not subject to tariffs, would also take a hit. That was by weakening demand related to goods trade such as transport and logistics. Broader uncertainty could dampen spending on travel and investment-related services. The WTO said it expected commercial services trade to grow by 4% in 2025 and 4.1% in 2026. That's well below baseline projections of 5.1% and 4.8%, respectively.
There's been a major shift in White House press access. Wire services such as Reuters, Bloomberg and AP will no longer have a permanent place in the small pool of reporters covering President Donald Trump. The White House made the announcement, marking a move to exert tighter controls over who can ask the president questions and report on his remarks in real time. The decision has raised fresh concerns among press freedom advocates and media organizations about transparency and access to the president.
Wire services, including Reuters and Bloomberg News, will no longer be guaranteed access to President Donald Trump. The decision by the White House on Tuesday comes as it moves to exert greater control over who gets to ask him questions and report on his statements in real time. It also comes after the Trump administration last week lost a court challenge brought by another wire service, the Associated Press, over its exclusion from the small pool of reporters who cover the president. The White House barred the AP in February after it refused to refer to the body of water south of the United States as the Gulf of America, as Trump had ordered it be called. The pool typically consists of around 10 outlets that follow the president wherever he goes. Under the new policy, wire services will lose their customary spot in the pool and will instead be part of a larger rotation. Wire services tend to cover the president and the White House more closely on a daily basis than most outlets. Other media customers, particularly local news organizations that have no presence in Washington, rely on wires for up-to-date reporting, video, and audio. Financial markets are also dependent on the wire service's real-time reports of statements the president makes. According to guidance provided to Reuters by a White House official on Tuesday, Press Secretary Caroline Leavitt will have the discretion to determine the members of the pool on a daily basis. The official said outlets will be eligible to be included in the pool, quote, irrespective of the substantive viewpoint expressed by an outlet.
All right. U.S. ride-hailing company Lyft is making a big move to expand internationally. Now, Lyft has announced that it is buying mobility platform FreeNow from German auto giants BMW and Mercedes-Benz for around $200 million. The deal marks Lyft's entry into the European market as it looks to challenge its bigger rival, Uber.
Lyft is coming to Europe. The U.S. ride-hailing company said Wednesday it is buying mobility platform FreeNow from German automotive giants BMW and Mercedes-Benz for about $200 million to expand into the continent. Lyft has been seeking new avenues of growth to compete with larger rival Uber. David Risher is Lyft's CEO.
We're now a profitable company. We're generating cash over $700 million last year, and we've said that that number will be even greater this year. We've announced a share buyback of up to $500 million. So we're in a strong financial position and strong cash position to be able to do this acquisition of a great company.
The purchase of FreeNow will nearly double its potential market and open doors to major European cities such as London, Paris, and Milan. It will face competition there from Estonia's Bolt Technology and Uber, as both companies have a strong hold over the market. The deal announcement comes on the same day activist investor Engine Capital named its two nominees for Lyft's board, after Reuters reported last month that it was gearing up for a boardroom fight. Shares of Lyft fell on Wednesday, but not as much as the broader stock market, as the S&P 500 ended more than 2% lower.
All right, and moving on to UK, where British inflation slowed to 2.6% in the month of March, its weakest rate in 3 months. The drop from 2.8% in February came as prices for computer games and fuel decreased. However, inflation still remains above the Bank of England's 2% target, and higher bills and rising employer costs are expected to pressure prices in coming months. Slowdown was also aided by the rise in clothing prices, which had previously fallen in the month of February. Despite this, officials warn that the economic outlook remains challenging. Treasury Department Minister acknowledged that many families are still struggling with the cost of living, with concerns over global changes adding to the anxiety. And that's all we have for you on this edition of Morning Brief at 9. News 9 will continue to bring you all the latest updates of the day. Thanks for watching.
Expert living. I need my carrier.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता